Yeah, very good afternoon to all. So, welcome to this last session of this 5-day GAM program. So, actually, this session has planned at the morning time, but of course, we have shifted to the afternoon. This is actually the after this session, there is a continuation with respect to the what is the role of the PPP models in general in the project financing system. But before going to that, actually, so what are the complications will be there in general in the financing of any kind of infrastructure project are specific to the transportation projects. So that we are going to discuss in this lecture. Like there is no kind of any mathematical or something like that. It is everything is the completely theory. So just please bear with me to understand if you have any doubts or like so why these kind of models are important, finance different finance models, other approaches. So of course, I have very less experience, or even I don't have much experience on that, but I can speak on that, like how generally this financing will be there in the transport infrastructure projects. So first of all, understand that what this project financing actually, it is the involvement of the like corporate sponsor investing in a specific to the some project, or it is a kind of borrowing of some money from the some like the private party into the project and giving the rights to the project to the private party. So that's the way the financing system generally comes. So it may be like the as a single purpose sometime, or creating a assets to the industrial or like the governmental mutually. So it is sometimes completely independent to allocating a fund or financing a fund for the different purpose. So there are different projects if you see from the 1997 to 2001. So there are several projects have the different way of financing system. Some projects they may executed with the bank loans. So mostly if you see the bank loaning are uh, like the going to the loan to for the any project is the most common financing system actually. Apart from that, so some recent projects has success with respect to the alternative of getting a fund or like financing of for the project. So it may be like the bonds or like the taxation policies, or may like the kind of the lending of the lands to the different users, or may like the different parties, generally agencies we generally call. So but if you see the role, the PPP role has increased drastically from the 2000 as compared to the previous year. So that's the reason we need to understand why the PPP has deliberately incorporated or like involved into project financing. And after involving of the PPP models, like what happens into the risk of these who are actually giving the fund to the project, or maybe sometimes what is the who are the borrowing the fund as the government or like any other agency. So this financial plan for the period of the construction generally we look at. Of course, if you want to do specifically some specific renovation system or like maintenance system, that also need to be financed, but that is very rare case. Like if you are constructing a project as a bigger scale, maybe like kind of construction a metro project, construction of a airport, so that need to have huge amount of the money. Specifically, the land acquisition process itself is the huge. Like even if you have the railway projects, like we have the high speed rail, so acquiring of the land, it is the very specific financial way to acquiring of the land. So then we required a thorough understanding about the project and what is the whole tax structure of the project. So after completion of the project, what is the kind of the tax we generally going to collect from the public? What is the kind of total contribution of the tax into the project? Okay, left of the tax. So, okay, this is the total amount of the month fund to be raised. That need to be estimated actually by looking of the different types of the taxation structures, or like the fuel surcharge charges, or like the registration charges put to all together. So then you need to identify what is the total amount of the fund to be raised. Of course, apart from that, a detailed analysis and corresponding to the specific tax burden system for the users and the non-users point of view, or specific class of people, or a specific class of category of the vehicles. The category of the vehicles, if I'm considering like the vehicles which carried by passengers, the vehicles which carried by goods. So if I'm segregating both, then I need to understand that okay, what to be or how much to be collected from the to whom we need to collect the fund, that is the users, okay, There are users, there are non-users. Then what is the kind of fund taxation policy distributed between them, as well as the goods vehicles versus the non-goods vehicle like the passenger vehicles. So this is the way the financial program generally adopted. So generally, when you are involving the corporators into the financing system, so generally the more opportunities idea to be given to the fund who are actually giving the fund, are more like the industrial persons. So it maybe do not allow the joint ownership mostly. So we should not have the joint venture like joint ownership between the agency of the government versus the private parties, because there is a like fund allocation distribution problems generally it occurs. And the direct expropriations can occur without the triggering of the default. Okay, we need to give the, okay, this is the proportion of the fund to be borrowed. So then this is the proportional to that. So this is the total amount of the project. What you call the project project financing, as well as what you call ownership of the project. So we, according to that, the proportions of the direct are like the proportions of the fund. Actually, what actually the different corporate financiers are actually giving, corresponding to that much amount of the proportions of the ownership to be given actually. And of course, the creeping of the exproportions is difficult to detect and highlight. Okay, we don't know if you are exceeding some amount of the proportions of the venture of the project. So what actually the resultant in terms of the the impact on the project is, we don't know actually. So sometimes it may be not good for the corporator, or it is not good for the agencies who actually lend the or borrowing the money, and it is also not good for the financial risk might be higher for the government point of view. So then we need to understand the multilateral lenders, which helps to mitigate and understanding the risk, the lending of the project companies, and the non-resource debt to tougher covariance with respect to the corporate debts. So then it is very important to understand that what is the total amount of the non-resource and the non-course of the fund which is not allocated to the budgeting or corresponding to the your corporate funding point of. So suppose if any like options of the corporate safety net, so then what kind of the incentives to be generated free cash to the your corporator, like the who is actually giving the money. So there are different types of the financial risk involved. So at the different stages, there the different risk will be there actually. So now if you look at that, why they need to motivated, like how they generally motivated even there is. So there are some problems, then we can give some kind of structural solutions of the problem. So there is a higher risk of the project. If you have the use in terms of the total budgeting of the project or the costing of the project. So that may be like that may gives the healthy corporation in terms of the fund allocation, or like the funding to be given for the project from the your corporator have the distress actually, which means that okay, they don't want to fund to the project. If you have more and more risk, then obviously the risk of the project can increases the cash flows volatility. So that means okay, how much amount of the fund will be required, and what is the kind of reduction in terms of the value of the fund, and what is the kind of the debt equity ratios of the fund. So these are like there is different volatility involved, because there is a more and more cash flows corresponding to the increasing costing of the project. So in such cases, what kind of the solutions can be given? So the solution will be the project finance investment exposes the corporation to loses only the to some extent of the money. So it need not to be all the money will be bear by the corporators. Okay, we generally give that in the memorandum of understanding, or like the kind of agreement. Okay, this much amount of the money will be have risk for the corporators. Again, the project financing and the sponsors can share their project risk with other sponsors. Sometimes there is a mutually jointing of your ventures will be there, and the pooling of the different capitals to reduce the provider distress cost, or more like the kind of the risk cost. And it is also important that what is the relative smaller size of the investment can be allowed into the project, even if you have worth to allow a like kind of some X percentage, like 10% of the money to be allowed into the project. That may be allowing more amount of the funders generally into the project. But that is another kind of risk is there. If more number of funders are there, then there is a different kind of the disbursement of the the generations of the cash flows from the project will be very difficult. So this is the kind of the understanding of the problems and the kind of structural solutions for the risk contaminations of the projects in terms of funding. So then we have the motivational point of view, like the again. So there is a failures. Sometimes there are some projects will get fails, but at the time, if the fund is already allotted by the funder or like the your corporate funder, so then what kind of the risk will be involved into that actually? So then we need to look at that. Okay, the failing corporation can be dragged the healthy project along with that. So then we need to look at, okay, the sponsor of that project will positively influenced by the some extent of the segregation of the money into the completion of that extent of the project. So which means that so the co-insurance benefits, like the some kind of, even if you project is get failed in terms of the either in terms of completion or in terms of the completely 100% execution of the project, sometimes some of the project will be insurance. So then if any such kind of failures are there, corresponding to the insurance money can be given to the corporate funders. That is the kind of structural solution will be given to attract the corporate money into the project. So there are some theories we have actually, that is the portfolio theory, options theory, equity debt theories, and the type of the debt and the sequencing. So these, according to that, the funders will try to look at that, what is the total amount of the cash flows into the project, as well as corresponding to the cash flows, then what is the kind of expected money generation from the project. Let's try to understand the portfolio theory. It is a combine the cash flows variance of the project or the sponsor with the joint financing increases with the relative size of the project. If the project is very high, then there is a more amount of the cash flows can be expected. Then there is a more risk also will be there. That is the project risk corresponding to the different levels of the cash flows corresponding to the different debt to equity ratios are like the different kind of expected generation money from the project. And the positive cash flows always correlation between the sponsor and the project, because if you have the more positive cash flows, then there is a more kind of advantage to the sponsor of the project. If the negative cash flows are there, which will be drawback to the project, again it is drawback to the sponsor. So the firm value decreases due to the cost of financial distresses, which increases with respect to the combined variance. So we need to look at that corresponding to the various levels of the project in terms of their total cost of the project, as well as the risk. What is the kind of the variance is existed along the different projects. The project finance is preferred with the joint financing, so that is the corporate financing mostly, and results increase with respect to the combined variance. And also the corporate finance is preferred when it is results with respect to the lower combined variance corresponding to the diversification in terms of the insurance or in terms of bonding or in terms of the tax execution policies and like that. So then this option theory is also further deliberate that the downside exposure of the project may be like underlying assets which are involved into the project. If you look at some of the projects have the different types of the assets will be involved into that, and these assets will be shared by the funders even. So some extent, if you have the negative impact with the project, so then what is the risk involved into the project will be corresponding to the assets of the project will be shared by the sponsor or like the funders even. So then the what is the total amount of the highest interest will be given corresponding to the funding. So that might be kind of the fees on the loan. So that is if you're taking a loan of the out of 1,000 crores, you might be loaned 800 crores. Then what is the total amount of interest on the 800 crores that need to be look at that when you are financing the project. And the underlying assets corresponding to the options provided to the funders, then it is the kind of payoff to them actually after completion of the project when it is successfully running the project. So then this financial option theory is also indicating that actually what is the total valuable value of the project corresponding to the sponsor to look at in terms of the optioning or like in terms of willing to give a fund to the project actually. The sponsor may not want to avail the project financing at a time with respect to the all the cash flow at a time actually. So it may be like the generally the sponsor will look at the project at the different stages to understand the risk corresponding to sponsoring. And if the project is the part of the larger development, then it may give the idea there is a positive cash flows of the project is more compared to the negative cash flows. And if the project is represents the only just kind of the property assets, or maybe like the kind of local local some certain region level, so then there is a chances that okay, there is a kind of risk involved. So the best example, if I see, like if you have look at the national level project and if you look at the state level projects, the state level projects might be have the higher risk compared to the national level projects. So that is the national level projects always will give the larger side development corresponding to the region development like that. So it is again default to damage the firm's reputations and the ability to raise the future capitals respective to the damaging corresponding to the local level projects in general. So then the equity versus the debt, if I look at, so then we need to look at that what is the total agency cost involved as the equity value. So then corresponding to that, what is the marginal discretions and the exproportions corresponding to the project to be identified. So the agency cost involving that, okay, if you have the total amount of the construction cost of your project, so then what is the kind of cost of the materials, cost of the equipment, and cost involved in terms of the construction process. So that is everything will be put together. That is the agency cost. So then corresponding to that, we have the risk involved at each stage in terms of the materials opportunities or in terms of the even equipment opportunities. So then sometimes some locations are like the some point of the time, the opportunity will be given to the funder or sponsor, which will be get reduces based on the more risk involved into the different set of opportunities. Because suppose if you look at the material side, so there is a more and more risk involved compared to the just construction of a project actually. So again, if you are acquiring like the equipment from the other countries, then there is a more risk involved in terms of the taxations or like the kind of importing surcharges. There are several kind of risk involved into that actually. So that's the reason sometimes the funders will be try to understand with respect to the different kind of agency cost at the different levels. So then the depth provides a governing mechanism into that actually. So this depth will be that okay, this is the total amount of the mechanism corresponding to the total amount of the fund will be required for the project. So then apart from that, we have the bank loans with respect to the different kind of interest rates. So then it may be like the conversion with respect to the better monitoring system of the what is the fund and what stage the fund to be given and how this fund to be given. Sometimes the fund will be given with respect to the quantum of the work is completed from the project, or the fund will be given according to the stage by stage of the monitoring of the project period. So then apart from that, we have the project bonds that may be like the corresponding again lower interest. So then these bonds will be sold out to the before execution of the project. Then the total amount of the fund will be raised from the which is required for the project. Then the agency loans also we have another kind of the financing method of the project generally, which will reduces the exproportion risk of the project corresponding to the pre-fund available to the project. So then we have the insider debt. So that is also maybe confirms that this is the total amount of the capital required for the project. So then we have another method of understanding of the financing choice as a sequencing. So that may be like the sequential way of the debt to be recovered from the corresponding to the lenders or like the loan providers in general. So that may be adding that, okay, this is the total amount of the cost, then this is the kind of the risk corresponding to the project, and these are the total cash flows at the different levels. Then according to that, okay, we generally try to avoid some of the cash flows from the directly lenders or like the sponsors in general, but that money generally will raise it from the bank loans or maybe we may raise it from the other parties like the tax policies, sorry, maybe like the bonds probably, or maybe like the other categories of the agency cost like that. So then if you look at that, so what actually we have the Indian transportation infrastructure respected to the central government versus state government versus the private sector. So this is the total participation from the different categories. Like if you see the over the time actually, so are in specifically road infrastructure projects, the involvement of the private sectors are increased drastically, and it is almost a 37% contribution, and the 27 from the central government and 36 from the your state government side. So the same way, if you compare across the projects of the infrastructure, like the within the transportation, the railways is almost 87% contribution from the central government, and the ports 86 is contribution from the central government side. Then the metros or the monorails or maybe all other categories of the rapid transit system is also highest contribution from the state as well as the central. But if you look at the roads might be the highest contribution from the PPP models like the private sector models in general. Then if you compare within the road category, like the Bharatmala, NH under NHDP projects, or like rural roads, then this is the kind of contribution we can see that, so, or how many number of projects are going on corresponding to the percentage of shares respectively across the different categories of the transport project, or like transport infrastructure projects. So then if you see that total almost 149 plus 113, it is almost the total highest projects corresponding to the national highway categories, and only there are 4% of the projects are corresponding to the rural road, and other categories like another 4%. So then if you compare across the countries, so then if you see like Singapore, Republic Korea, and US, then India stands that what is the total amount of the overall efficiency in terms of the funding of your project, in terms of the infrastructure efficiency indicators. So then, corresponding to the seaports, the air transport, rails, and the roads, then the roads have the corresponding to the Indian case. Like if you see almost the equal in terms of the equity, efficiency of the infrastructure in terms of the funding, actually, like the roads versus the rail as well as the air. So almost on the 4.5, 4.4 in the equal in numbers. But the Singapore other categories, it's not like that actually. So if you see the road is the highest, almost like the corresponding to the seaport or like the other categories compared to the rails. So even if you look at the low, maybe like the comparable countries like Brazil specifically, the category of the road infrastructure efficiency in terms of the infrastructure efficiency is little less compared to the other countries. So then if you see that actually, so this is the 10th and the 11th and 12th plans of the infrastructure planning system in India. So this is the source from the Government of India 2014 of the High Level Committee of the Financing Infrastructure. So if you observe the numbers, so that indicates that what is the central and state sectors of the different public and private partnerships of the project. So if you see 2007, so 1429 projects are participated the private parties into these projects. But in 2017, if you see the number has drastically increased to 9,000. Even 2012, there is a 12,000. So any questions or any points at this moment, or you have any points to be discussed till this slide? So please put me some questions, then we'll discuss on that. Hello, any questions, Manish? Anyone? Okay, then we'll move on to the next slide. So then even if you see that public, private versus the total, so the public actually, even though it is having the significant in the investment plans from the state as well as the central, but almost the numbers are actually very closer and closer, or sometimes it is very closer to the public to the private actually. So that is the way the development of the financing models into the infrastructure projects from the private party to the involvement to the public part, public projects actually, or like public funded, or like the government or state government projects. So now why it is actually important? So now if you see that actually, so there are different types of the highway department financing aspects, are like the points are involved. So there is a real estate taxes we have. So that means if you look at the specifically the road projects, like what kind of the financing model generally involved to get acquire the total amount of the fund. So that maybe like we have the real estate taxes. So that means the taxes which need to be collected from the lands actually when they are going to register the land. So then we have the general funds, then we have the vehicle registration fees, then we have the motor vehicle fuel taxes, then we have the higher level government funds, which we generally given to the different categories of the projects. So then apart from that, we have the borrowed funds from the different types of the loans generally. So these loans may be like the bonds, bonds category respective to the different selling of the lands or adjacent to the some of the projects. So now if you look at that, the highway department as the disbursement for the different categories of this money, whatever the money they generally collect in terms of this money, like what are the taxes we are collecting, vehicle registration, like the motor fuel taxes and everything. Now if you diversify this fund for the different categories of the works, or maybe like the projects, maybe like we have the highway construction, then we have the projects related to the maintenance and operation, then we have the projects related to the only patrolling of the projects like the highway patrolling system, then we have the other research and the planning, and we have the simple debt service projects actually, like where we this fund what we are collecting from the taxes, pooling of the tax fund in terms of the registration fuel tax funds or the motor vehicle registration fund. So if you collect a, like let us assume 1,000 crores you have collected per year, and how this 1,000 crores to be distributed for the construction and to be distributed for the maintenance and the operation, and how much amount of the money to be distributed for the patrolling of the or patrol related projects. So then there is a systematic way to understand that actually. So then what is the how you are actually putting the charge to the user and collecting of the money, how much to be replace or like the re-input into the funding of your project for the different level or like different point of the time. Maybe after post construction, then you are leaving a charge from the users actually. So out of this leave charge, so some amount of the money to be given for maintenance and operation point. So the conduct of the financial study is consisting of, for that actually we need some kind of financial study, that is the forecasting of the highway user tax revenues based on the current tax rates, and forecasting of the other revenues that is applicable for the highway, that is the road or maybe like the street purpose or any other categories of the road. Maybe like we have the road categories itself, we have the national highways, state highways, MDRs, village roads. Then which category of the roads to be prioritized first? So the prioritizing system, whether I need to go for the national highway system or I need to go for the funding of the projects for the urban roads itself. So that diversification correspond to the what is the revenue you are generated from the project is very very important. So this division of the program cost between the users and the non-users generally to be taken care, and the allocation of the user shares among the various classes of the vehicles and corresponding to the different categories of the project, and the recommendation for closing the gap between the revenues and what is the need. So what is the total amount of the money you have and what is the kind of the need of the money for the different purpose in terms of maintenance, operation, or like any other category. So then once you have done that process of the forecasting, so the projections of the future revenues to be we are going to estimating. So then that may be deriving from the family of the highway user taxes, like we have the taxes at the different stages of the highway costing process. So then that may be like the motor vehicle registration as well as the highway use tax probably. So then it can be defined in terms of the density of the vehicle ownership. So that is maybe like travel per registered vehicle. So even if you have the registered vehicle, sometimes this vehicle cannot be taken out. So then you don't know that what is the total amount of the miles that vehicle has traveled or kilometers has traveled. So that's the reason. So that may be very easy to coin with respect to the what is the total amount of the kilometer travel per liter use. So that's the reason there is a tax to be taken from the fuel side actually instead of vehicle kilometer travel side. But corresponding to the total vehicle kilometer traveled, so then we are converting the fuel value. So then you will get that what is the total amount of the money you have, and the population projections and the indicators of the future economic growth and the valuable tools of the forecasting is to be understand. And other revenue sources which must be projected are those derived from the property or the special assessment taxes like local highway user imports or general fund contributions. So these are the ideas we should have to understand corresponding to that. The predominant use of the roads for the land access mostly. So now even if you have the road, let us try to understand this point. Like even if you have the very closer to the your home, maybe national highway, but most of the time you are the non-access person of this road actually. So then, but what is the total amount of the tax to be collected from the users who are access direct access and who are the users are not access actually. So sometimes even if you want to access it, like from your home, you might be accessing very closer to that. So there is agriculture field. So you are traveling. So let us assume there is a kind of the toll here. So now you are. I hope you are understanding the point. So like you have the road. Let us assume that this is the kind of 4-lane divided roadway national highway. So then you have the small village here. Okay. So then from this village, so like I'm taking just kind of 1,000 inhabitants are living in this village. So then these inhabitants have the kind of different types of the agricultural land somewhere here and the agricultural land somewhere here. So then this they kept as a kind of toll collection system here somewhere. So now we are taking every time the vehicle. So of course, it is completely there is no kind of access road, nothing is there. Even if you want to access these agricultural fields, you have to go along the route toll. So you are going to the accessing of your land alone actually. So that means hardly a distance of the 500 meters, or maybe like you can assume maybe 2 kilometers you are traveling every day. So every time you have to pay for that actually. But who are actually traveling the most distance which need to be traveled on the national highway, they obviously pay. And who are actually these people generally we call as the non-users of the, which is residing of the people closer to the project actually, or closer to the road. Then what is the way we need to make them to understand that who are actual user of the highway and who are non-users of the highway? Any questions or any points? Hello. Okay then. I hope you got the idea what actually we are discussing. So like you have the user and you have the non-user of the particular highway, but how we are going to collect a taxation from the users generally. So the predominant use of the roads for the land access will give a way to inter-community and the inter-regional uses requiring a longer trips at the higher speeds, and it might be expected that the higher type of the design and the increased highway construction cost. Like you want to access more different regions at the different places, and you need to go with respect to the high mobility, then it is maybe indicating that there is a requirement of the high category of the projects as like national highway, something like that. And the whole concept of the financing changed from the one of the property tax support to the use of highway user tax revenues as the major source of the highway funds. So mostly it is the kind of the highway user tax revenues is one of the major source of the fund for the highway projects. So then the original motor tax, like what we have the original motor tax as the registration fees is, was considered more of the regulatory tax than a revenue producers, which means that, okay, if you have the regulatory, it is the kind of usual kind of process. When you are purchasing a vehicle, we need to have registration fees. So that is a very regular tax generally. So this tax, from this tax, whatever we are collecting, so some amount of the money will also goes to the some projects or some categories of the project. So then the legislators, with respect to the administrators, soon become aware of the revenue producing possibilities of this tax as the number of vehicles increased rapidly. So then if you have more and more increased taxes, so then you have the more and more registration fees to be collected, then it may be increasing the revenue corresponding to the registration taxes will increase. And such revenues were used largely for the highway purposes and substantially supplemented the traditional revenue sources. So this is the what I can say. You like you have the requirement of the 1,000 crores. Out of this 1,000 crores, I am going to say like there are 5 different fund sourcing of the project. So this is the to construct a 4-lane divider roadway. Maybe it may costing around 1,000 crores. Out of this 1,000 crores, I have the chance. There are different types of the sources of the money I have to fulfill to maybe like what can I say, to complete the project with respect to the different funds. So then out of this 1,000, so whatever the revenue I am generating or like the tax registration tax I am getting, so that is the maybe fulfilling 10-20% of the requirement. So that means the 200 crores will complete it with respect to the revenue or regulatory tax of the registration fee. Then I have to look at for the remaining 80% of the money. So some amount may be loan and some amount like maybe like the bonds, and the some amount we are going to look at for the PPP model or like the financial. Some financial has to be looked at, and the remaining thing may be other kind of the vehicle tax like the fuel tax, something like that. Any questions? Hello.
Yes, no questions.
So this traditional general fund concept, that is all tax revenues were placed in a common fund. So that's what actually we are talking. So you need to look at that whatever the total tax revenues which you are collected, that to be kept at the common fund point of view. So then appropriately for specific governmental functions or the governmental segregation or dispersion of the fund, at the time these revenues what we have collected to be dedicated to be used for the different highways at the different conditions. The highway user taxes can be considered as the standby or readiness fund, or readiness to the survey fees, or like the registration fees, and a tax that varies with respect to the user of the highway with respect to the motor fuel. Again, even if you are collecting the tax as the registration, but the person my travel will be different actually. Even though I have purchased a vehicle, with no guarantee that I am using every day. So that depends on that what purpose the user wants to take out his vehicle. It may be like car, it may be like two-wheeler. Of course, the two-wheeler contribution is very less. I can compare with respect to the two-wheeler versus the other categories of the vehicle like trucks. So then the amount of the kilometer travel by truck will be increasing the fuel used by the truck. Then obviously if you are using a more and more fuel or consuming a more and more fuel, which indicates indirectly, okay, there is a more amount of the money as the tax you are increasing. And the third structure taxes paid by the heavier vehicles. That's the reason the heavier vehicles are a highest contributor than other categories of the vehicle in terms of the fuel consumption or in terms of the additional cost incurred providing adequate facilities for such vehicles. Now we have the highway user tax revenues. Then apart from that, we have the road and bridge ferry tolls. Then we have the general fund appropriations. Then we have the property taxes. Then we have the bonds. Then we have other category as the miscellaneous. Now, what actually we are trying to understand here. Now, if you look at that, okay, you have the highway project. And for this project, so the first most, the fund readily available fund might be like your the highway user tax revenue. So this is the mostly readily available fund because so it is irrespective of the vehicle whether you are traveling or not traveling, it won't bother. So if you are purchasing a vehicle, then you are paying a registration fees. Then from the registration fees, then the government is acquiring or getting some amount. Some amount. We don't know what is the total amount we have with that, but we have the some fund. Let us assume that okay, this is the project you want to construct, but all of suddenly this project have some kind of the major section as a major bridge, maybe like having the highest major bridge in a one particular section, but this bridge will require the additional fund actually. Sometimes this additional fund will directly collected by using of this bridge or ferry tolls or like the some kind of specific toll system, where it is expected that the change of the element of a road infrastructure projects mostly indicating that there is a increasing cost of the project. So that means that cost to be collected directly from some means of the toll collection system. So that is the way some of the roads might be having the more and more tolls, which indicating that there is a more and more increased cost of the project due to the different structures. Then apart from that, we have the fund, general fund appropriations. Then we have the property taxes. Then we have the bond proceeds. So let's see that. So then the cost of the construction and the maintenance of the primary system of your highways can be closely associated to the public utility concept. So in that, the user such facilities pay the full cost of the facility. So that means whatever the cost of the utility are correspond to the public utility concept. So then whatever the cost is associated with respect to the construction and the maintenance will be taken some extent from the utility concept point of view. Okay, how much amount or extent time you are using a highway, according to that you have to pay. So which means that actually whatever we have as a fixed toll system, that is not appropriate. How many of you know that the government of India is going to introduce new toll collection system? Anyone has any idea on that?
I think, sir, in fast track type they are installing the new tool system. The direct
Yeah,
revenue goes to the government.
yeah. FASTag is the one category of collection system actually. to
Okay.
reduce the travel, what you call the waiting time at the tolls. And apart from that, there are different types of the mechanisms generally in the developed countries. If you see these mechanisms generally, what you call like you're using a road, a specific road at the most of the time. So that is, let us assume that, so this is the road is going on. So then this is the kind of the one region we have, maybe like the one city. Let us assume maybe this is the Mumbai. So then you have the Pune. So then if you are coming closer, so then there is a kind of Karnataka state, something like that. So if the person is started from the Mumbai, then going up to the Karnataka, Bangalore, then he might have used the most of the time, the maximum length of the route. But the person who traveled, so this is the small village or town, and there is another small village and town. So then there is a toll is kept here. So that means if this person is traveling the lesser distance but still is paying the toll. So sometimes even the distance traveled maybe like the hardly 20-30 kilometers, so he is paying some amount, some x amount of the money. But if the person is traveling the longer distances, sometimes this person which need to be paid is paying less compared to this person. So that means if I'm comparing the relative travel time on the highway, so you might be paid. Let us assume that just for the understanding purpose, he paid 100 rupees by traveling of, let us 15 hours. Okay, so by traveling of 15 hours, maybe I can increase 1,000 rupees even. So then he traveled 15 hours, he paid 1,000 rupees. 1,000 rupees little higher side. I can keep maybe 600 rupees, not more than that. Okay. So then by traveling of he paid like 600 rupees. So then the other person who traveled maybe like the 5 hours, and he paid maybe like 120 rupees. So there is a difference of the cost in terms of their travel on the highway. So this difference sometimes very high when the local users are there on the highway system compared to the regional users. So because we are importing the fines, or sorry, not fine, importing the toll cost to the users respective to the travel of the longer distances. So then there is a problem or issue respective to not understanding that what is the total amount of the time spent on the highway. So now the Nitin Gadkari has introducing, or it is already going to start very soon, probably. So according to the time which you have used or traveled on the highway system corresponding to the GPS connectivity or GPS system of the vehicle, so you have to pay a specific amount of the money corresponding to the travel time spent on the national highway or highway system. You got the idea? So what actually they are trying to do? But there are some issues with that actually. So they are going to implement a GPS system for each and every vehicle. It is mandatory now. So this vehicle corresponding to the GPS system, they will going to track. So along the national highway, they will give the fixed point, the toll collection system. So like the same, whatever the toll collection we have, but it is on the not as generally whatever the toll collection we have the automatic camera reading systems as the tolls, like the high end cameras which is can read the fast tags even. So those kind of the cameras they are going to insert on the highway system. Then according to the GPS, like you have the X1 Y1 point respective to the your GPS camera, and X2 Y2 of the GPS camera. So then X2 minus X1, so that may be estimating a travel time. So then corresponding to that estimated travel time, it is automatically collecting this camera. What is the total amount of the money to be collected?
As per my understanding, sir, in this highways in Maharashtra, in Samruddhi, they collect the toll on per kilometer. Means how much kilometer you drive, as accordingly you have to pay the toll. As
Yeah, that's what actually that is very recent idea. Even the whatever the outer ring road we have at Hyderabad, that is also distance based collection. But it is actually distance based collection system is not appropriate. Even they are trying to look at that instead of that, even the time based collection system actually.
okay.
So that is they are thinking it is more appropriate than the distance based, because the time, why it is need for the time, anyone have throw some light on that? because the distance is always fixed actually. Let us understand this point. You have the 100-kilometer stretch of the road. So then according to the 100-kilometer stretch of the road, so then why the people wants to pay actually? So why they want to charge from the people? Because I'm providing a service with respect to the better service. So I constructed a highway which is earlier 80 km/h speed. Because of the improved road quality or improved highway system, four-lane divided roadway, and there is no disturbances to the vehicle, then this speed has gone up to the maybe like 100 km/h. Now I'm allowing the maximum mobility for that improved 20 km/h speed. So now the user has to pay for that because he is availing the service of the increased quality or in terms of the speed specifically. For that he has to pay for it. So that means if you are keeping for the distance base, so even if it is a, let us assume this 100 kilometer, so even if you travel at the different point of the time, the distance will be same, but the travel time will be get varies actually. If there is no congestion on the roadway system, then your mobility might have improved like anything. Corresponding to that, the amount which you have traveled corresponding to the 100-kilometer even, so then you are enjoyed maybe extra speeds. So that is the reason. So they want to implement in terms of the, instead of distance based, so maybe like the travel based. So many national countries, they have the travel based system. So let's understanding the more about the highway cost allocation to the users and the non-users point of view. The benefits derived, so that maybe that reduced travel times or increased speeds, and therefore the cost incurred by the non-users are difficult to measure actually, because I am the non-user of the highway mostly. So, but what are the benefits you are making are deriving from the highway system that may be more beneficial to the users in general. The usual approach to the allocation of the cost responsibility is to determine the user share of the program cost and allocate the residual cost to the non-users. Okay, I estimated that out of the all the highway system users, okay, these many number of actual users and these many number of non-users. Now you put that, okay, out of the 50 crores to be availed from the users, or you can keep that, okay, out of 50, 45 crores to be spared by users, remaining 5 crores to be spared by the non-users. That's the way the highway allocation system of the user and non-users will work, because the users will have the direct benefits because of the highway systems or improved quality of the highway system as compared to the non-users. But sometimes the non-users contribution or the distributions are equal to the user side, so we have to segregate that actually. And the factors involved into the motor vehicle taxation schemes. So this may be like the tax base and the tax rates for the motor vehicles. And the motor vehicle as a property, unlike there is a not standard product, like you have the two-wheeler, like you have the kind of other categories of the vehicle, you have the vehicles of the maybe like the goods vehicle category. So corresponding to that, you have the different taxation system actually. So there is no single criterion for the factor by which the tax equity can be measured. So it may be like the sometimes generally measured with respect to the width, length, and height of the vehicle, and also the gross weight of the vehicle, axle weights of the vehicle, and number of axles, and the performance and the ability and the road speed. So the fuel used by the vehicle, like these are the different types of the points or the criteria to be collected or to be used to collect the motor vehicle tax policy. And the vehicle factors affecting the highway construction cost through elements of the highway design. Like if you are improved highway design and the quality of the highway design goes good, so then obviously there is a kind of improve in terms of the speeds. Then the that may be achieved corresponding to the increasing maintenance and operational system. So the variation in terms of the fuel consumption rates, it is highly important because the fuel tax base, which accounts for high percentage of the all road user taxes, corresponding to that amount of the time the vehicles used for the roadway. So when considering the highway construction cost and the highway maintenance cost in relation to the road user tax basis or rates, the considerations are further compounded by the fact that there is no best scheme to relate what is the total amount of the cost given for the different rate of the vehicles. Okay, what is the total amount of the money will be assigned or allotted to the right of way as well as the earthwork point of view, because the construction of a road, it is not single activity alone. Like you have the kind of you have the different kind of the activities. Like you're constructing a road, so this road might be having the embankment, so then afterwards you are constructing a subgrade. So then you sometimes you have the high embankment, you have sometimes you have the low embankment sections. Then apart from that, you have the kind of other category in terms of the road construction. Then you have the barrier systems. Then you have the median construction. Like there are several conditions or criteria we have. Okay. So according to that, whatever the money you're actually collecting, so this money cannot be allotted. Okay, this much amount of the money to be allotted for the embankment, or the subgrade, or the layer construction, or maybe like the operation, or maybe like any other kind of means of activity of the construction. So that means there is no specific fixed amount of the money to be allotted for the different activities which are involved into the construction or infrastructure construction, like earthwork, drainage, structures, shoulders, pavement, traffic, like that. Some of these highway cost factors are joint cost. Can I expect that what is meaning of the joint cost? But not directly proportional to the vehicle factor. What is meant by the joint cost? So like if you are improving a shoulder actually, so most of the time it is expected that the construction of the shoulder is also including corresponding to the barrier which you are applying, corresponding to the shoulder type or shoulder condition. So that means the shoulder cannot be treated alone as a single cost of construction. Shoulder plus barrier to be incorporated together. So that may be kind of the joint cost. So there are several examples we have actually joint cost. So suppose you are operating a bus. Let us assume that, so you know that operation of a bus which incurred a operational cost in the one direction. Okay, so this is maybe like best example compared to the previous one. So this is the kind of the operation of the bus from X to Y point you are operating. So corresponding to the X to Y point, so I need to operate a bus from the X point to the Y point. Then the operational cost incurred of the bus may be like, let us assume 100 rupees. So now you have to come back that the same bus from the Y to X again. So even if you have the passengers, even if you don't have the passengers. So what are the passengers you have there earlier from X to Y? So then this cost will be borne by those many number of passengers. But when you're coming back Y to X, you have the zero passengers, maybe like when you're traveling midnight probably. So still the joint cost involving that, what is the total amount of the operational cost will be there corresponding to that particular trip. So that is the way generally the joint cost will be involved. So then the annual mileage is a factor because of the fuel tax payments are the dependent upon the miles driven, but the license or the registration fees are not related to the mileages in general, because the mileages will vary with respect to the categories of the vehicle, type of the vehicle, like that, and the fuel used by the vehicle. And the registration fee is large, a low mileage vehicle has compared with respect to the high mileage vehicle maybe suffer greater inequalities. Sometimes you might be having some of the vehicles might be high, very high mileage compared to the some other categories of the vehicles. So that may be solving some kind of issues respected to the what is the total inequality in terms of the mileages, and correspondingly if you are collecting a registration fees respected to the mileages not uniform actually. So there is a like there are a lot of inequalities involved into that. So when this registration fees is a nominal, so the nominal sum, that is the annual mileage, is the less important factor determining the equitable user charge taxes. So then the tax basis, if you look at that, we have the registration fees, then we have the motor vehicle fuel tax. So then there is a special import on the heavyweight trucks actually. That is a special third category structure of the tax based policy. So then the registration fees of the passengers cars correspond to flat fees. So what is the flat fees we have on the each categories types of the vehicles? That is the compound tax on the basis of weight, horsepower, and the value and the age. And the registration fees for the commercial vehicle may be based on the empty weight declared for the gross load weight to be carried by the vehicle and other factors. And the motorway fuel taxes is a constant rate per the liter of fuel for each categories of the vehicle. but there are some variations in the tax rate with the type of the fuel, not corresponding to the category of the vehicle. So it is all about the fuel types respective to the which type, how much amount of the fuel consumed by the vehicle. The third structure taxes are specifically imports with respect to heavy goods, heavy gross weights vehicles are the usually high annual mileages, and these are the based on the ton miles, axle miles, and other weight distance factors. So these are the ways we generally have to understand the collecting of the tax system from the different categories of the vehicles, and all these tax systems can be imposed into the highway financing system in general. So now if you look at that, so the transport financing have the private investors, then they have the government investors and the private lenders and the public and the users even. So the users you understood now how they're coming into the transport finance, then the beneficiaries. So these are the providers mostly, these are the kind of the recipients and the kind of beneficiaries. Then we have the different capital flows of this project financing. So now if you look at that, so then you have the involvement of the public and private. So the public in terms of the governmental, then the development institutions, then the private maybe like corporators, and the project financiers are like the fund agencies. Then these fund agencies like the PPP model are like non-PPP model mode probably. So then the corporate financer like the public companies like private companies. So this is the total financing structure of infrastructure in general. Any questions till this point?
No, sir.
Okay. So then the funds for the infrastructure finance, that is public sector financing like tax revenue, non-tax revenues, public bonds, loans, and the other kind of the institutional funds. Then you have the private sector debt and the commercial banks, non-banks financial, then the equity and the public-private equities. So these are the way the financing will be raised by the even public versus the private. The phase, so but there is a different forms or like the different kind of the issues can be expected in terms of the maybe sometimes there is some taxes will have some subsidies. These subsidies when you are like having some of the projects specific to the government interest projects, there is a subsidy will be given to the taxes when you are importing some categories, special categories of the vehicles, or maybe like the when you are acquiring a land specifically, there is an import on the sorry, there is a kind of what you call the rebate, or maybe like the kind of subsidy in terms of the land acquisition process even. Like there are different types of the subsidies the government is expected to give for the lenders, or maybe like the who are actually party of the project. So many factors have placed pressures on the public officials to consider the privatizations of the transport infrastructure. That is the fiscal problems and the high operating costs, or like the cross subsidies, or maybe like the equalizations. These are some of the important aspect or factors which are impacting conversion of the public related projects to the private related funds. So then one of the core goal of the privatization concerns that the derived efficiency gains compared to the transaction cost of the process alone, and the efficiency gains involve the higher output level compared to the what cost incurred from the incurred to the project, then the more productive use of the infrastructure. So then we have the transaction cost or the cost related to the exchange, or like the public to the private ownership, and could involve the various kind of the compensations or like the kind of subsidies to the existing public workers. Again, the public infrastructure they tend to be very high and the involving of the delays due to the regular changes of the transactions. Then we have there are several options of the ranging from the complete sale of the infrastructure, that is a management contract, when there is a public sector retains the ownership. So that is another important aspect actually. Who is retaining of the ownership of the project, whether it is the public sector or whether it can be completely given to the private sector. So now you need to understand that the three forms of the privatizations are particularly dominant. That is the sale of concession agreement and the existing of the facilities and the concession for the new projects. So again, the management contracts, like there are several other aspects even, but we have some limitations for the private capitals. That is the level of privatizations is commonly perceived as the kind of desirable outcomes of the efficiency of the project. Then we have the capital cost. Then we have the domestic versus the foreign financing system. That is, the local private capital markets can be very limited. That's the reason most of the time when the larger like a major infrastructure projects, we generally goes for the foreign financing system. So which is very important for the countries like developing countries. So this foreign financing system will enable that some extent of the fund will be going to going to acquire or going to get from the other kind of the loans or the interest in general. So then if you look at the PPP, like the public-private partnerships are the contractual agreement between a public agency that may be like federal, state, and the municipal, and a private sector entity that may be like any kind of the operator in terms of the private, in terms of that project maybe including like designing, building, operation, financing. So then it may be compared with respect to infrastructure projects. There are several financing difficulties inherent into the project, such as the acquisitions of the long segments of the right of ways, that may be like land acquisition process, and the resettlement issues, and the unforeseen geological and the weather conditions. So these are the some of the important aspects we have. So there are substantial risks associated with that, that unpredictability of the revenues and the toll recipients due to the competing of the routes and unexpected revenues in terms of the availability of the connecting roads, or in terms of the unexpected execution of the system of the roads even. So the main objective to promote the efficiency of the project, and also to reduce the public sector maintenance at the risk to the public sectors. So then to reduce the cost to the public sector and improve the incentives to the revenue collection and allocation system to the other parties. Any questions till this point? Okay. So what I will do actually, so I forget one important aspect of this GAN program, that is like exam to be conducted. It is the exit exam generally. So we have almost a more than 30 minutes time. So I will post the exam in the Google form in the group, WhatsApp group. The remaining few slides I have that can be easily shared. We can easily understand actually. So because the major part of the financing modeling system is completed. So if it is okay, then I'm going to share the Google form. Kindly, these are like multiple choice questions. Try to give some options or complete the exam. Okay, it is mandated to have the exit exam. The same thing we have to submit to the GAN office.
Okay, sir.